So while all the political drama is hitting a boiling point in Washington, D.C., and I mean the US government is literally moments away from a shutdown, a totally different story is playing out in the world of global finance. See, investors aren't just sitting there watching the clock. They are making some really bold, long-term bets on the future, and trust me, some of these moves might actually surprise you.
All right, let's get into it. First, we're going to break down the immediate crisis in Washington and what the economic fallout could look like. Then we're going to explore three really fascinating and very different investment strategies from around the globe that show you exactly how smart money is reacting to all this uncertainty. And we are starting right in the thick of it. A last-minute funding deal was rejected, there are no more votes planned, which means the world's biggest economy is about to grind to a halt. You heard that right. Lawmakers have already gone home, and that clock is ticking down. And as you'd expect, the political blame game is already in full swing. We're hearing accusations flying back and forth that the livelihoods of everyday people are basically being used as pawns in this huge political showdown.
And well, now it's official. The Office of Management and Budget, the OMB, has sent out the memo. They've ordered federal agencies to start their shutdown plans. But here's the real kicker. The OMB straight up admits they have absolutely no idea how long this is going to last.
So, what does this actually mean for people, beyond all the cable news headlines? Let's talk about the real-world impact of this political gridlock, because the ripple effects here are huge, and they go way beyond Washington, D.C.
A shutdown like this, it basically creates a massive chain reaction. It starts with the very real threat of job cuts for federal workers, right? But then it spreads out to interrupt defense contracts, it delays the economic data that the markets absolutely rely on, and yeah, it can have a real negative impact on everything from stocks to your own retirement plan. And the scary part? The longer it goes, the worse it all gets. All this chaos, it obviously leads to a really important question for anyone with money in the market. When the place that's supposed to be the safest bet, the US market, is dealing with this kind of self-inflicted wound, where do you even look for stability? Or maybe more importantly, where do you look for growth? Okay, so let's check out our first case study, which is a pretty powerful response to all this chaos. Just ignore it. Seriously, just tune out the short-term noise. This is the strategy coming from the Chief Investment Officer of the Texas Municipal Retirement System. So, instead of freaking out over the daily headlines coming out of D.C., his team is laser-focused on these 5 massive, unstoppable forces that they believe are going to shape the entire next decade. We're talking the AI-powered digital transformation, the urgent need for modern energy, building stronger global supply chains. They're investing in the future, not in today's political drama. And this really gets to the heart of their whole strategy. The argument is that while public markets, stocks and bonds, are getting crowded, the real opportunity to get what they call alpha, those big outsized returns, is in private markets. Why? Because there, investors can actually get their hands dirty, take control, improve how a company operates, and actively create value, instead of just passively riding the market roller coaster. Now, let's pivot to a totally different strategy. Half a world away, in Indonesia, some of the country's wealthiest families are making a bet that puts national progress way ahead of just making a profit. So, Indonesia's sovereign wealth fund has created this really unique thing called Patriot Bonds. The whole idea is to get the country's biggest business groups to team up and fund projects that have a huge economic and social payoff. Think things like turning waste into energy on a nationwide scale. Okay. So here's the key. A normal, conventional bond might pay out over 5%. These Patriot bonds, they offer just 2%. So you have to ask, why would anyone do that? Well, it's because the definition of return is completely different here. The real payoff isn't measured in dollars, it's measured in jobs created and huge environmental problems solved. It's truly an investment in the nation itself. And that brings us to our third strategy, and this one is all about taking aggressive action. Instead of ignoring the noise or investing in national pride, the South Korean internet giant Naver is out there actively trying to buy and build the future. And you can see their focus right here. Naver is making some huge moves in these super high-growth areas. I mean, we're talking about their massive buyout of the e-commerce site Poshmark, and they're sniffing around for deals in fintech, crypto, and gaming. They are on the hunt for businesses they can build on. This quote right here, it tells you everything you need to know about their method. It is not just about buying a company.
The whole plan is to inject their incredible AI and search technology deep inside a company like Poshmark to completely transform how people shop. They don't just want to own it, they want to reinvent it from the ground up. So, when you kind of step back and look at these three really different stories, all happening at the exact same time as the meltdown in Washington, a really clear picture starts to form. Investors are not just sitting around waiting for the storm to pass. No way. We've just seen three powerful but very different responses to all this uncertainty. First, you've got the long view, ignore the politics, and bet on huge inevitable trends. Second, you have the national project. Turn inward and invest in projects where the payoff is social, not just financial. And third, you can go on offense. Strategically buy the technology and platforms that are going to define what's next.
And all of this leaves us with one final, kind of provocative thought. As all the old, reliable pillars of the global economy seem to be cracking, maybe the very definition of what it means to be a smart investor is changing. Maybe, just maybe, it's becoming less about finding the safest, most stable market, and more about finding and backing the boldest, most game-changing mission.